Nice to have your company. The market is on fire in this session. It's doing really nicely, 0.75% up. And now as well into the second hour, the miners join that support with the banks, having already gotten off to that firm footing, all big four in the black.
And the New Zealand market up by about 16 points, and I'll continue mentioning it, the Nikkei index up by 1.7%.
It seems investors are ready to continue the rally with confidence jumping 12.7% in the February quarter. This is the GPS Melbourne Institute Shareholder Confidence Index. It's now showing its largest quarterly gain since August of 2009, and there's strong buying support clear across all sectors. Strong optimism coming, actually, despite the uncertainty of that pending federal election. The Melbourne Institute Professor Guai Lim adding that the confidence surge doesn't reflect the New Year rally, but is a sign of times to come. This index is now running 18.6% above its value a year ago.
Let's delve deeper into that GPS Melbourne Institute index today and talk about some of those key trends emerging from it. We're joined by Andrew Thain, who's with us from the Sydney studio from GPS, a director. In fact, Andrew, great to have you on board. Thank you.
Thanks,
yeah,
Brooke.
what a move for that quarter. Probably not unexpected. The market's above, or the ASX 200's above 5,000 points, which we know investors generally like to see.
Yeah.
Is this reflecting what we've seen in the past couple of months, or can we look at this and say that we've got further room to go higher on the market locally?
Look, we believe that we've got further to go. We think that this rally over the last 2-3 months certainly has some steam left in it. As Carson mentioned, the confidence spike of 13% over the last quarter was actually the biggest spike we've seen since 2009 in August. And we use this as an indicator of not only what we've seen, but it's a forward indicator based on a lot of the survey questions that we ask do have to do with future trading intentions. And there's been an uplift across all investors in regards to what looks like a participation rate increase over the following next quarter and beyond.
Intriguingly as well, an event risk the likes of which we've been worried about, particularly with certain sectors set to suffer the federal election. If you're in this sweet spot now, it seems not even that is putting you off. You're just casting aside any talk of that dampening sentiment. So say your respondents.
Yeah, absolutely, Carson. What we've seen is it's a whopping 88% of shareholders, when surveyed, would the looming federal election have any impact on their investments in shares? 88% of shareholders said no, which is a whopping result, given that usually in a year of an election, with the uncertainty that's created, with instabilities in Canberra, usually you would see a little bit more caution from investors. But in this result, taking into account that it was around the same time of the Nielsen polling, it could mean a couple of things. It could mean that investors believe that the market's going to continue to rally, which we do believe, but it also could mean, and we don't obviously survey investors on their preference from a government choice, but it could also mean that a coalition win, and it could mean that they see increased business confidence as a result.
Are you saying that because you're extrapolating from the fact that that Nielsen polling was done at the same time, and that's obviously showing quite a clear lead for the coalition at the moment? Yeah,
exactly, Brooke. So the survey that we conducted across our investors was just after the AC Nielsen polling, so it could result in that, because it's such an overwhelming result in regards to 88%. Now, also as part of that, 2/3 of investors also stated that they see no increase in volatility as a result of the looming election, which again, usually with instability around Canberra and the year of an election, we'd expect to see a higher number of people concerned about volatility or even a cautious approach, and that's just not what we're seeing in the latest survey.
Just on that one, are you seeing any trend on age, on gender lines to kind of back that one up as well?
Yeah.
When you drill down into who responded?
Yeah, it was across the board in regards to the confidence levels, but we did see a major increase in confidence, which is across not only the investments and the returns and the volatility, but it's also across future buying intentions and future selling intentions. And that age bracket of 21 to 30 years old, we saw a major increase in confidence around volatility and certainly some stability as part of this next 12 months.
It's still the case, is it not, that 100 level, which in your book separates the optimists from the pessimists, if you like, bullish from bearish. We are just holding above that level, sitting at 102.8.
Yep.
It's not a shoot the lights out stat.
Yeah, but what we are seeing, Carsten, is a huge increase of where we sat, 12 months ago. We're almost 20% ahead of where we were from confidence levels. And as I said, we look at this as a forward indicator based around asking future intentions. So future trading intentions, along with volatility and returns, there is a clear sign that investors right now believe that they can achieve greater returns in the share market and their confidence levels are at an all-time high.
We're constantly asking and discussing whether the high-yielding bank stocks, for example, can continue to push even higher than where they are now. Any clues in this report on what investors actually think on that when it comes to intentions and trading expectations?
Yeah, really interesting again, Brooke. The market darlings, so the chase for yield, like your banks and even telecommunications, which is obviously heavily weighted with Telstra, they're still continuing to get support. But what we did see in future intentions was there was an uplift in industrials as a sector, and also there was an interesting lift in consumer discretionary. Now, again, this could have a tie into results around a JB Hi-Fi, but it was really interesting to see that some cyclical sectors are starting to get a little bit more support around future trading intentions.
Just walk me through, Thain, if you could, the 1,000 respondents.
Yep.
Are you consistently going back to that same group to build up that kind of a perspective, or they change every quarter?
No, they change. So it is 1,000 investors. And the key thing here, which is away from just your Melbourne Institute Westpac Confidence Index, we talk to shareholders. So they must hold Australian equities. We talk across all ranges of age, obviously both sexes, but it's a targeted 1,000 approach across all states of Australia, which gives us the scope of input that's required to have a survey of this nature.
Andrew from GPS, thank you so much. Great of you to join us and walk us through it. Thanks.
Thanks, Brooke.